Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Yesterday, the Australian bears took a step back in yesterday's trading session. After hitting a fresh yearly low of 71.65, the market rebounded and went back to challenge the recent objective of 72.0515. After printing a high of 72.23, the market is now questioning whether we've seen a high. I expected to see a slight further challenge to 72.35 to 72.65, but this didn't eventuate, with the market back under the downside of the RSI 50 midway point on the 4-hourly chart. Does suggest further pressure is back on the Australian dollar. Later today, we do have the Reserve Bank of Australia to announce its benchmark interest rate and also publish a rate statement which outlines economic conditions and the factors affecting the monetary policy decision. A hawkish statement could inject minor momentum for the pair. At present, though, the trading strategy is still to sell rallies towards 72.35.65 and look for the immediate target of 71.40.60. Now, a break beneath 71.40.60 would give further indication to a bearish case and therefore could see the market fall towards the region of 69.40.80. Well, the dollar index is still maintaining above the 95 handle. After yesterday, the market was out for the US and Canada in observance for Labor Day. However, the euro did trade in and out of minor losses as the markets continue to show concerns to the escalating trade wars between Washington and Beijing, to which could damage the world economy as the White House prepares to slap new set of tariffs on imports from China. With the clock ticking, the deadline for the public consultation of President Trump's plan for tariffs on another $200 billion in Chinese imports ends Thursday. On the flip side, it is expected that China will be unable to match the same size of tariffs by retaliating with the levies of $60 billion on US goods, but instead may opt for additional measures such as curbing US companies' activities. Also, along with this, President Trump warned Canada last weekend that it will be out of a revised North American trade agreement unless it's fair to the United States. However, it is not clear whether the trade administration has the authority to strike a deal with Mexico as of yet, after its announcement last Monday of excluding Canada. Congress must approve any rewrite of the North American Free Trade Agreement signed under ex-President Bill Clinton, and might refuse to endorse a deal that leaves longtime ally Canada on the sidelines. But the dollar index also, as I mentioned, above 95, does see further pressure for the euro, with the technical implications with the RSI already breaking down and the MACD nearly marrying the outlook, could see further weakness. Now, a break beneath 115.60.65 would give us the move to the downside and re-challenge the area around 114. Sell into any rallies, with resistance seen at 116.55 and of course firmer around that 117.55.65. Dollar yen, no change as it moves sideways and still around this 111 handle. I'm not overly bullish. And when you look at the weeklies, first of all, is the MACD is actually breaking down, and then we move on to the dailies. The MACD is also breaking down, with the RSI a little bit confusing. It is therefore seen that the market may drop towards the region of 110.0525, right above this downtrend, which was once resistance, now broken, is seen as support. A bounce off 110.0525 would give further scope further to the upside, and then would give me a comfortable call to 112.50.60 as a new target. The pound dropped away rather sharply in the last 4 days, and as you can see here, since the rejection of 130.40.60, is the market's pressure in the trigger level at 128.45. Now, a break beneath there, we're right on it now, would give further scope to the recent lows of 126.60.80, seen as major. Beneath there, 120 to 122. The gold outlook, like dollar yen, trading sideways and given little direction. However, I am still bullish as long as we maintain above the 1,192 level. This in turn would see further upside to a 1,220 target. Wrapping up with oil, well, the market's trading sideways. No bulls are at present. to take this challenge higher around this $70 level, and instead could see a back away from this region and therefore look down towards a support level coming in now at 68.95. Only a break beneath 67.10 will give further scope to the downside. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.